have the pleasure of being the last speaker between you guys and lunch. And so normally that's not a good place to be, but hopefully talking about something that I think interests everyone might help. And that's money. But being at a startup festival, I'm not going to talk about money the traditional way, which is how to get it, how to find it, how to spend it. I'm going to be talking a little bit about both the history of money and what I believe is the future of money. Now, how many people, I want to see everyone kind of raise your hand and keep it up, have heard of Bitcoin? All right, good. How many people have heard of the blockchain? Okay, how many people own Bitcoin? Okay, gives me a sense of kind of where we are. Early last year, I co-founded a company called Blockstream with a lot of the core developers who manage the open source project of Bitcoin. And we went out and had a vision for how we could turn this into a platform that everyone could use and really extend it, kind of the red hat of Bitcoin. So we raised a little seed round, and we got started on what has been a grand adventure. Brief history on money. This is not for economic reasons, but we've always had some form of money. There's been barter exchanges. One of my favorite stories is the island of Yap. Anyone heard of the island of Yap? Small Polynesian island. And what they did for their form of money is they had these massive stones, and they would mark on them and carve on them a ledger, and you couldn't move them. And everyone just remembered which stone belonged to which family. And there was this famous story of they were importing one of these huge stones, and the raft, the canoe, sunk. And it was still close enough. They said, well, we can't pull it up, so we'll just dive down and mark on the ledger, and anytime someone wants to see how much they own, they can swim down and see, right? So, I mean, that was a form of money. We've had commodities, foodstuffs, and goods, and then we went to coinage, usually gold, silver coins, and that kind of became the way you dealt with exchange. And then we went to something that's called fiat currency. Paper money. Now, paper money was actually a creation of a Scottish economist who was also an infamous gambler, womanizer, drunk. I don't think that's all Scottish economists, but he worked for the French government, and they had essentially gone bankrupt building the Louvre, but they wanted to finance the Louisiana Purchase. So he came to them and said, you know what? I got an idea. Why don't we print paper money, and we'll tell people it's as good as gold. And the king loved it. This is a great idea. So everyone started getting this, and it led to the first major stock and bank collapse because they started keep printing money, and this is where the term millionaire actually comes from. And they kept printing money, and then eventually someone said, I'd like to go to the bank and get the gold that my money is worth. And it created a run on the bank. 18 people died that day, and the entire banking system collapsed. So, has some similarities to a few countries that are currently in the news. But this was the idea of paper money and fiat currency. And then we had merchant banking. So, in Europe, around 300 years ago, a lot of the kings and the royal class were trying to get into the business of how do we derive revenue. So they kept cutting the coin value because coinage was there. So they would put different metal elements into it and say, it's still worth what it was before, it just doesn't have the same content. And all the bankers were getting frustrated with this, so they developed a private system of letters of credit. And this is where some of the great merchant banking houses like Rothschilds came. Because they said, we're not going to trust government, we're going to create our own private money where we have letters of credit that we trade between companies. So, I mean, long history of money, and that's only a small part of it. But when we had the internet start to develop, there was this question of, what about digital money? Wouldn't it be great if we could actually just email money? Invent digital money. So the work of this really started with a cryptographer named David Schoen. And in the 80s, he published a series of papers that showed how you could build real electronic money. A digital file that couldn't be copied, it couldn't be replicated, it could have all the same properties of cash. So everyone loved this. There was a group called the cypherpunks who said this is the future, this is how we'll have privacy on the internet, this is how we'll avoid having an advertising-based internet. But every single company that attempted this in the 90s failed, including one of mine. There was one of the most famous ones was X.com, which was created by Max Levchin, Peter Thiel. They tried to develop this. It failed, so they migrated to PayPal, which was much more like a credit card system where you had to trust a third party. We had Flues.com, if you remember the old Whoopi Goldberg ad. There were Beans. We had one called Zero Knowledge Systems. So all these companies had raised money trying to invent this digital cash, and they all failed. And one of the reasons they failed was, who do you trust? DigiCash issued a whole bunch of digital money there. And when DigiCash went bankrupt, all the tokens were worthless because they were the central issuer. They were the person that said, I'm going to issue you a token and make this token worth something. So all of these attempts, early attempts, failed because they all required trust in an intermediary. And everyone said, why should I trust you? And money, at the end of the day, is just trust. You're trusting that what you're accepting has the value of what people say. So this leads us to Bitcoin. I'm going to do a very kind of rapid history of Bitcoin for people. But in late 2008, an anonymous or pseudonymous person posted a white paper where he floated the idea of a new form of electronic cash. And he combined a whole bunch of research from a number of different places, but he put it together in a new way that no one had before. A couple months later, he released open source software. Then we started seeing commerce begin. One of the most famous ones was someone bought for 10,000 Bitcoins a pizza for someone else. A couple years later, it turned out to be a $21 million pizza. So, but as we saw the commerce begin, we also saw the media start to take advantage. So all of a sudden, the media starts talking about Bitcoin. Economists came in and said Bitcoin is evil. They hated this idea that a group of anonymous programmers on the internet had invented their own form of money, and people were using it. Now, then we started to see the Bitcoin price rise. Started to rise to $100, and then merchants started to say, hey, why don't we accept Bitcoin? We can cut out credit card fees. If people want to spend it, and there's a market for it, let's start accepting it. And you saw this in some traditional markets, but you saw it in a lot of other places. The dark markets. So sometimes this is what Bitcoin gets associated with most often. Things like Silk Road, which was an illicit market for drug purposes, the dark web. But this is the same as most technologies. Okay? Most of the PC industry was built by people pirating the phone system. Okay? We've seen the innovation on the edge, the pirates usually lead the innovation in the experimentation of technologies. When I started my internet provider in 1994, one of the first industries to come in, our biggest customers, were involved in the adult industry. And they were the first to use credit cards because, they were innovating on the edge. It's on that edge that usually we see innovation happen. Now, beyond that, the price really started to take off, and we saw huge speculation. So in this year, Bitcoin, became the highest performing commodity in the world. And literally overnight, a whole bunch of programmers and Uber geeks and early experimenters were all worth $100 million in Bitcoin. It was just this crazy overnight, and people called it the tulip bubble. It wasn't going to last. But a couple things happened in this time. So one was a Bitcoin mining rush. So those of you who aren't familiar, Bitcoin is made and released in the world through a mining process. It essentially acts like a lottery system, and every 10 minutes, new Bitcoins are handed out to whoever wins the lottery. But to compete in this lottery, you need to run an infrastructure called Bitcoin mining. And that same infrastructure is what processes transactions. So following this, we saw Mark Andreessen come out and say, Bitcoin is essentially the internet of money, the TCP/IP of money. We saw some major things happen, like one of the largest Bitcoin exchanges went bankrupt and lost 600 million of people's money. And everyone thought this is the death of Bitcoin. Price crashes, we saw the price continue to crash. Everyone talking about Bitcoin is dead. In its small history, Bitcoin's been dead around 20 times. So where are we today? We've got this new digital asset. It's divisible, it's scarce, it's transferable, it's unforgeable, and it's totally decentralized. There is no company that runs Bitcoin. People talk about it like the potential of being the new digital gold. So this platform and this infrastructure that's been laid, I compare very much to the buildup of the internet in the first dot-com boom. Companies laid tons of fiber, built huge data centers, and they overspent everywhere, and it had this huge buildup. And then the 2001 crash came, and everyone said, oh, the internet's over. But on the back of that infrastructure, we saw Facebook, we saw tons of innovation, because the infrastructure doesn't go away. So that's part of where we see. So we see a number of infrastructure companies who have now been well-funded for this new economy. Wall Street has now begun to wake up to this. We've seen NASDAQ, New York Stock Exchange, Goldman Sachs all say, this threatens our business. And frankly, they're sitting there saying, we don't want to be the blockbuster in the face of Netflix. They're terrified that this is going to be what the internet and publishing was to the newspaper industry, that this is going to be their future. So this blockchain infrastructure is totally decentralized. Anyone can talk to it, anyone can code to it. There's no requirements, there's no entry. And this is what's exciting, because we now have this open source platform that allows anyone to send or use money. Now, some of what happens with this powerful ledger is, if we compare it, there's a whole bunch of things that are all ledgers too. Stocks, bonds, currency, trading, settlement. These are just all ways of keeping track of who owns what. And people are now looking at this blockchain infrastructure and say it's faster, it's better, it's decentralized. So why not issue stock on the blockchain? What about doing a crowdfunding on the blockchain? What if I want to send money overseas? Could I do that through the blockchain? So all of these have led to a comparison where we previously had these closed traditional systems that were slow, centralized, they've been hacked, and every time Wall Street or the financial service industry makes a mistake and it leads to a big crash, the government comes in and says, we need to regulate you more, which increases the cost. So we've been in this vicious cycle of Wall Street or the financial industry making a big mistake, regulators coming in and saying, we're going to add more regulators and rules, costs going up. So all of a sudden, the idea of a shared cryptographic ledger using proven cryptography that everyone can be a part of, that has no central control, that has no central point of failure, starts to become interesting. So in comparison to the traditional ledgers, the blockchain is totally open sourced. What you're trusting is the combined network of the blockchain. And just to give you an idea, the blockchain right now, it's very single purpose, but it has more computing power than the world's top 500 supercomputers by a factor of 12,000. And it's been entirely self-financed by this industry, by this idea of the blockchain. So what are some of the potential markets or exciting markets? Remittances. Right now, a huge part of different countries in the world rely on money being sent back. Western Union and companies like that charge anywhere from 10 to 15%. And they charge you more depending on how poor the country is that you're sending it to. So that can lead to almost 20 or 30% commission to be able to send money home. We've now seen a series of Bitcoin startups that are doing that for 3%. That's a massive change. Payments, when we want to pay for things. There are a number of companies and a number of industries that have problems using credit cards. They're just not a right mechanism. So all of a sudden you can replace payments, crowdfunding, equity offerings, the idea that you could go public without having to do it through a broker who charges you 5%. This has already happened. A number of companies have issued stock directly to the public on the blockchain. Derivatives and Forex, those kind of, I find those boring to a certain degree, but for some quants and math geeks, the idea that you could build an automatic enforceable derivative contract where you don't have to trust for any counterparty risk. And this leads to the idea of smart contracts. Because one of the things you can do when you have programmable money is you can actually write in the rules and have it automatically be enforced. So if you and I want to make a bet on whether or not the Canadians will make it to the playoffs next year, we could say, we'll bet 2 Bitcoin, and we can both sign that, and we don't have to trust each other. The minute the Canadians don't get into the playoffs, the right person gets paid. So that brings up a lot of interesting potential markets. So why does this excite me? When we think about some of the heroes of the internet, some of my personal heroes who built great companies, they did not do it alone. They did it on an infrastructure that had been laid over 10 to 20 years. Open source software, TCP/IP, fiber. There was a platform that made those companies possible. And then that platform was further extended to a next generation of companies. This is the very first time that we have an open platform for money. An open platform that allows anyone to go and deal with transferring of value. So I believe that this will lead to a world with provably fair financial plumbing. The idea that you can actually trust a financial transaction or a market because you know it's not being manipulated. I believe that it will also lead to global and more fair financial markets internationally. I think we can expand and reach out to the 2.5 billion people on the planet who are unbanked. They don't have credit cards, they don't have access to credit, they can't get access to any modern financial systems. So how do we expand the market to them? They don't have anything they can go and provide, in many cases, as ID or collateral to get a credit card. So to reach these markets, we need a new form of money. It's also going to aid in cross-border commerce. When you start dealing with cross-border commerce in countries like Argentina, they take 30% commission to change your money. It is next to impossible to do business there, and they're doing that to fight inflation. There's a company right now called Bitpagos that uses Bitcoin to allow people to book hotels and do business, and they totally bypass that 30%. So for vendors in Argentina, they went from paying a 30% commission to take US credit cards down to 1%. That is game-changing. I think we can remove a lot of friction in international business. But mostly, this decentralized secure infrastructure could offer a platform for a new class of internet applications. There's already a number of people who are looking at doing identity in the same format. So your identity doesn't have to be tied to Facebook or Google, where everything you do is linked to your profile. A new way to prove who you are that doesn't rely on a trusted person. For controlling assets, but mostly for trust. Because as this industry emerges, trust is not based on an entity or a trusted third party. It's on math. And actually, I much more trust the math of cryptography than I do many of the institutions I have to deal with today. And so that's why I find this exciting. The assurance and the confidence that we're able to build on this new programmable money, I think will change the world. Thank you very much.